Sure. I think that probably this year was the year when portfolios became, the sort of a regularly traded entity in the market. And I think that that's all about scale. And there's so much capital in the world to invest that portfolios have been a very sensible way for investors to get into the market. I think, Union did particularly well with the sale of their portfolio, as did SEB, selling pretty core assets. I think towards the end of the year, you're now seeing others bringing, more secondary assets to the market. I think what's quite interesting now is that investors are, I think, probably cautious about risk and are cautious about vacancy because we haven't seen rental growth in every market. It's only London, Dublin, maybe Stockholm where we've seen, real growth in rents. So I think that for me, we've got huge amounts of capital. I think, the risks that you talked about are absolutely right in terms of, there are various things out there that could, affect the market and affect investor sentiment. But generally speaking, we're very confident. I think, our view is that, the market's going to run for another, 2 or 3 years ahead, all things being equal. But they never are. So, we'll see what happens. But I think that, that scale of equity, which is really why we're here, I guess, is very much looking to be allocated. And there is certainly more capital than there is stock. So it's certainly a challenge.
Didn't we say in 2007 it's going to run for another 2 or 3 years?
No, I think that was a little. I think we kind of knew that was going to be tough. I think the US is going to be the one that drives, activity and what happens. And I think, as you say, what happens in the Fed in the next few days is going to drive sentiment. But I think today there are probably differences of opinion, as you highlighted, that some people think, interest rates rising will be a good thing because I think that it will show sentiment of a changing economy. But in global terms, that could have a negative impact on some countries.